The first atomic bomb was dropped on Hiroshima.
Oh, the humanity!
The fires of frustration and discord are burning in every
Let us
city.
not forget for a moment the toils and efforts that lie ahead.
They say that those who forget their history are condemned to repeat it. This is the History Lessons Podcast with certified financial planning practitioner Patrick Huey, author of History Lessons for the Modern Investor, and your guide to financial wisdom in the past, present, and future. You ready? Good. Let's get historical.
You want a master class in the long game. You don't need a finance textbook. You need Catherine O'Hara. Now, most people met her as the panicked mom in the Home Alone movie series yelling, "Kevin!" in the middle of an airliner because she'd left her son at home alone twice. Some of you may remember her stealing scenes on SCTV, and then decades later, she shows up as Moira Rose on TV's Schitt's Creek. And suddenly, there's a whole new generation quoting her, wearing her wardrobe. Same person, different eras, still working and still evolving, right up until her passing last week. Now, that's not a one-hit wonder. That's a career with staying power. And the economy right now looks a lot like that kind of filmography. Not perfect, sometimes a little weird, but more resilient than the early reviews would suggest. 1 month, the headlines are shouting recession, and the next it's soft landing. The next it's no landing at all. The script keeps getting revised, and yet the show goes on. The danger for investors is treating every scene like it's the whole movie. A hot inflation print, horror film. Home fit meeting, romantic comedy. One big order in one industry, summer blockbuster. And if you cut your portfolio to match whatever genre today's headline feels like, you end up with whiplash instead of a plan. A better approach is to think like a casting director, not a fan on opening night. Look at the body of work, not just the latest clip. An economy that's still expanding, businesses that keep finding ways to make money, and a central bank that doesn't feel the need to either slam the brakes or floor the gas every 5 minutes. Then ask what mix of roles, cash, bond, stock, growth, safety, actually fits the story you're trying to tell with your money over decades and not days. Your financial life shouldn't swing from slapstick to jump scare every time a new report comes out. It should look a lot more like Catherine O'Hara's career. Varied, adaptable, and still working long after that first big role. Rest in peace, Catherine O'Hara. After the break, I'll be back with this week's history lesson for the modern investor.
This episode is sponsored by Victory Independent Planning. At VIP, our mission is simple. Live well, do good. We build strong relationships with good people and help them turn money into what really matters. Retiring without worry, traveling more, supporting family, or funding the causes and projects they care about most. Based in Naples, Florida, and Portland, Oregon, we serve clients nationwide with comprehensive fiduciary advice, retirement income planning, custom investment portfolios, tax strategy, healthcare and Medicare decisions, and estate and legacy planning, all carefully organized around your unique goals. If you're ready for a plan that puts your best interests first, visit victoryindependentplanning.com and schedule your VIP consultation.
On February 4th, 2004, Facebook launched, when It's Just for College Kids turned into a global habit. I mean, seriously, where did we go to argue about politics before February 4th, 2004? Well, it was that day in a Harvard dorm room, a site called The Facebook went live. Now, at first, it was basically just a digital freshman Facebook, photos, profiles, and the ability to poke people, which sounded about as serious as a snowball fight. It was restricted to Harvard students only, and then a few more schools around the Boston area, and then the Ivy League, and then any college with an .edu address. The idea that this simple, slightly clunky site would one day have billions of users, influence elections, and sit at the center of some of the world's largest market caps would have sounded ridiculous. But my friends, that's exactly what happened. Facebook's story is one of compounding network effects. The more people joined, the harder it became to leave. It's also a story about how quickly just for fun can turn into can't live without it, both for users and for advertisers. And what happens when our attention spans become the most valuable product in the room. For individual investors and retirees, anyone trying to build a long-term plan, the rise of Facebook is a case study in habit. Distractions, potential bubbles, and the quiet power of staying focused while everyone else scrolls. Here then are 4 lessons for the modern investor from Facebook's unlikely takeover of your newsfeed. First of all, if you're not careful, you become the product. Facebook was free, which meant the real product wasn't the app. It was the users. Our time, data, and behavior became the thing being packaged and sold to advertisers. Now, investing has a similar trap. Many things like free or low friction, zero commission trading apps, hot takes on social media, quick hit newsletters, and easy allocation tools. But if you're not paying attention, your behavior, frequent trading, chasing trends, abandoning plans, is what generates revenue for someone else. Short-term emotional reactions are incredibly profitable for other people. A disciplined investor has to keep asking, is this helping my plan or just helping someone monetize my attention? Second, bubbles feel like communities, at least while they're inflating. As Facebook grew, it wasn't just a website. It became a place where your friends, coworkers, and family all were. Once everyone is in one space, liking, posting, and arguing, it's easy to start believing that what's happening there is what's happening everywhere. Market bubbles work the same way. In 2007, the community was housing and real estate discussions. And in 99, it was tech chats and message boards. Today, it's just as likely to be something like crypto or a meme stock thread. When lots of people gather in the same digital place, talking about the same assets, it starts to feel like truth. But it may not be. In fact, it probably isn't. Your retirement plan must be anchored in your needs, your time horizon, and your risk profile, not in whatever your current online circle is excited or terrified about. Third, constant notifications are the enemy of long-term thinking. Facebook normalized the dopamine hit of endless notifications, likes, comments, tagged photos, memories that you didn't really ask for. Financial media and many apps have borrowed the playbook. Push alerts, every tick in the market, every Fed rumor, every analyst upgrade or downgrade. It is addictive. But it's also poisonous for serious planning. Long-term wealth is built over years with boring habits like consistent saving, rebalancing, tax-aware decisions, not with hyper-reactive moves every time your phone buzzes. If every market wiggle triggers an action, you're not investing. You're scrolling with a brokerage account attached. The fix is simple, if not easy. Turn off the noise. Decide in advance how often you'll review and adjust and give your future self some peace and quiet. Or hire somebody to take that peace off your plate. Finally, scale is powerful. Be sure you point it at the right things. Facebook went from a dorm room project to a global platform because it could scale. More users, more data, more advertisers, all feeding back into growth. Now, your own financial life has a quieter version of this. The habits you repeat and the decisions you automate. Auto contributions into retirement accounts, regular Roth IRA conversions when appropriate, periodic portfolio rebalancing, and yearly tax reviews. Those small buttons that once pressed keep pushing your plan forward. Same's true in reverse. Letting lifestyle creep scale, every raise becomes new spending, letting cash pile up untended, or letting a single undiversified holding grow unchecked can quietly scale risk instead of resilience. Going viral is great for social media. In your financial life, you want your good habits to be what's scaling. Here's my final thought. When Facebook went live in 2004, nobody thought they were logging into a world-changing industry. Just checking out photos between classes. But the compounding effect of simple, repeated actions, log in, scroll, click, repeat, made it massive. Your money life works the same way. You probably won't transform your future with one giant trade or one perfect call on the next Facebook. You'll transform it with 1,000 small choices. What you ignore, what you automate, what you question, and where you refuse to let other people's urgency hijack your attention.